From the morning reading, stocks pull back. Tesla finishes up 11.2%. Facebook reports earnings and rises in after-hours trading. Two sectors moved higher on Wednesday. XLU, XLK, and XLI were the strongest sectors, while XLE was the weakest sector. Breadth weakened as decliners led advancers 1.51 to 1 on the New York Stock Exchange and 1.02 to 1 on the NASDAQ. S&P 500 spiders due for a breather. The stock report has come a long way from its August bottom and may be due for a breather. The daily bars show the S&P spiders trading up against previous peaks formed during the May, June, and July in the 211-212 region. That's a logical chart spot for some profit taken to appear. In addition, its 14-day RSI line has touched overbought territory at 70. That combination usually leads to a short-term pullback or consolidation. Initial chart support is likely at the rising 200-day average. The overall trend, however, is for stocks to remain higher. Rising dollar hurts foreign earnings of large multinational stocks in the U.S. It also hurts foreign stocks that produce commodities. From everybody out to everybody in only 30 days. The S&P has moved from more than 6% below its 50-day average to more than 6% above it in barely more than a month. This kind of quick switch and deviation from the medium-term trend is highly unusual, especially outside of bear markets, and it has typically been a good sign for returns going forward. Gold has declined 13 of the past 15 days. Since 1975, the only precedent was in January 1998, after which it rallied more than 10% over the next 3 months. There were 13 times it declined 12 out of 15 days, usually leading to short-term rallies as gold was higher a week later 11 of the 13 times. This is the third time it has had such a wicked streak in the past 3 years, suggesting that the metal has entered a long-term capitulatory phase. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:49 a.m. Central Time, and I'm recording this in preparation for the market day of November the 5th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into our morning report. And indeed, in the U.S., the 4 broad market indices are all bullish, ranging from the Russell at about 0.25% up, NASDAQ and Dow up about 1/3, to the ES, the most bullish, up about 0.4. You have crude oil up about 0.25%. Euro just marginally up. Bonds essentially slightly below scratch, and gold up about 1/3. And overseas action starting with Asia, China up 1.8%. Though Hong Kong's only scratched, so that's kind of unusual combination. Japan up about 1%, and Europe, Germany up about 0.8%, and United Kingdom going the other direction, down about 1/3. In terms of macroeconomic reports for today, in the U.S., key U.S. reports. You have the unemployment claims, the weekly variety. You have FOMC member Dudley speaking, non-farm productivity, unit labor costs, FOMC member Fisher speaking. For those that trade natural gas, you have your weekly inventory report, and then FOMC member Lockhart speaking. Tomorrow, you have the big monthly employment report, and that's a very big deal, one of the big 4 reports, so you'll see a lot of attention paid to that, both in the markets and in the media. Also, FOMC member Brainard speaking. In terms of current volatility, short-term VIX up a little bit, 14.76. Notice the skew still remains elevated. This has been quite a trend here of late. IV percentiles only at 11, was single digits, moved up a little bit, but still very, very low on the S&P. Russell a 20, NASDAQ a 14, Dow a 19. No standard deviation moves were put in by any of the four broad market indices yesterday. And indeed, after having a period of really significant volatility, mostly bullish, even more unusual and more significant, we started to ebb back towards more normal levels with about four moves in a 2-week period, though one of those moves was a 2 standard deviation move. The more unusual, of course, has been the Russell. The Russell's had a very unusual cluster of very bullish multi-standard deviation moves in the last 2 weeks, and though that's calmed the last 2 days, it certainly has been still in the recent past. In terms of our, well, let's see here. Let's go to the charts. Notice on the SPX, and we mentioned in the morning reading, that this action right now is coming up against these tops right here. And you had something of a shelf. You had this kind of last touch of the former range high, swing low, and then back to a former swing high with multiple areas of touch before breaking down into the August breakdown. So on our recent action, as we've been talking about the various levels of resistance with small 2-day pullbacks, 2-day pullbacks, 2-day pullbacks, maybe this is another 2-day pullback. I heard yesterday somebody call this a tweezer pattern. I suppose you could take it as a tweezer pattern. I think if you really look at this, it's more of a bearish engulfing. Either way, both are potential reversal patterns. A tweezer pattern would not need confirmation. It would expect to be bearish in its own right. A bearish engulfing is certainly a reversal pattern, especially after having seen this kind of context. And when you get something that marches up 250 points in about a month, and then you get a bearish engulfing with a fairly significant sized body engulfing the prior day with a decent sized body, that's pretty indicative that we're probably setting up for something of a pullback. But again, pullback probably shallow, probably not a big deal. The first place to look for would be support at this area right here around 2079. And if that did not hold, probably support right here in this area at around 2058. Now, round numbers, you might get 2075, but a close ideally above that 2079, and you might get down here in this case, you might get down to 2050 in an undercut, but then a close above this 2059 area. Those are two areas of support that we'd be looking for if we do get any kind of pullback. With those pullbacks, if you see it breaking through this area, and especially if you see it breaking through this area, that would be setting something up for a more significant retracement. And so kind of keep that in mind. You expect to be very bullish and mild pullbacks unless these two areas don't hold, and then that sets you up for something more. Now, how do you tell? Well, for one thing, watch the dollar, and we're seeing that the dollar is really, really close to a significant breakout. And if we break through these areas right here, this 98 and change, and we're right at that area, then we'll likely see a major move in the dollar. Another place to look at is gold futures, and that has been breaking down. And of course, if the dollar goes up, gold goes down. Gold goes down, markets go up. There's a lot of relations here that you look. But if you start to see this pattern reverse, and the dollar pull back, you might also see the broad markets acting at the same time. Those could be some tells to take a look for what's going on. In terms of the Russell, you also had something of a reversal pattern here, but this would probably be more of a spinning top and would want to have confirmation. NASDAQ, potential spinning top, but a 52-week high. So again, there's a case to be made for both the bulls and the bears with that yesterday. And with the Dow Jones, more of a dark cloud cover combination. But across all four of these indices, you see these potential reversal candlestick patterns setting up. So those are early warning signs of what might come in the next short-term period. So kind of keep all that in mind. And just 1 second here. And from our regular daily report, a couple things to take a look at. You have phase 3 still going on. So indeed, we're looking for bull flags. We're looking for shallow pullbacks. Keep that always in mind. When you see these pullbacks, that's your primary expectations. Don't make too much of a pullback. Look at the pullbacks as opportunities to enter positions until proven otherwise. And proven otherwise would be those two levels that I gave you. IBD status, confirmed uptrend, accumulation, distribution. On the S&P is a B, NASDAQ a C. Continue to worry about breadth there. GMI index a 6 out of 6 with the buy signal now for the period since 1019, though that author remains in cash. Primary market condition, neutral bear. That's one of the warning signs you still have. No change since yesterday. We talked about some changes that had occurred just prior to that to the intermediate term. A lot of these flipping positive, and we're starting to see some of this in the long-term flip positive. Those continue to be some warning signs from the longer term. Intermediate term market posture, very bullish posture with an upslope sentiment. So that reinforces what we're talking about. Consensus across all this for the portfolio investor posture is that we're still in transition, but we're still looking for to be dominated by bullish signs, and increasingly so until proven otherwise. Both position sizing opinions are still at 100%. Intermediate term market posture is very bullish across all four indices. Hedge warning status 0 plus, normal with some elevated risk aspects. And we did had a couple more of these pop in yesterday. We had a market in decline and a sharp increase warning flag yesterday. We still have this skew. This time it's up over 130%, so a 10.4% probability of a 2 standard deviation move to the downside. Distribution day count has ebbed off in recent days and not quite warning status on the S&P at a 4. You also have very nice day put in by the New York Stock Exchange, new high, new low yesterday, 358 on the new highs against 111 new lows. All four the key intermarket risk aversion indicators are solidly risk on. In terms of special opinions, nothing new here. Just always be looking for those best entries and those bull flag breakouts to give you that kind of momentum that you're looking for an entry. And again, you would probably be looking at individual stocks, but each of these right here, here's a bull flag breakout. So when you get perhaps 20 cents above the top of this candle, that's your entry. There's your entry. There's your entry. There's your entry. So you're looking for these flag breakouts. You want to be pushed in with momentum as this breaks up. And that allows you to have a higher probability entry and not just say, oh, this is pulling back, I'm going to buy. Well, buying down here, you don't know that this is going to be a third, flag candle that continues to go down. You want to go in when you actually have a momentum energy to push your stock forward. And this is pretty classic bull flag pattern, all stacked through this entire area. And in fact, you probably would have called this a diagonal breakout and had an entry probably right in here. That would have been proved to be a very strong entry. And then the same thing here, 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 here. If somebody were scaling into a position, which would have been very smart, considering the kind of indications that we had at this point, we were very, very bearish in the short and intermediate terms at this point. But scaling into a position using these bull flag entries would have been very helpful to be able to build a position while keeping that risk exposure in a more moderate kind of approach. In terms of sector specific, you see the short, intermediate, and long term pretty much green all the way across. Consumer staples being really probably the weakest sector at this point, so keep that in mind. Percent change yesterday. Of course, yesterday was generally a down day, but it wasn't universal. Utilities had something of a recovery day, and they were up. And indeed, most of these are now showing a good bit of green across several time frames, going from short to more intermediate term. Things are definitely looking much stronger. Well, that should be enough for today. If what you're getting here is useful to your trading, we greatly appreciate you showing your acknowledgement of that by liking us on YouTube. Subscribe to us on the YouTube channel. We're looking for that first 100 mark, and I think we're just a couple people short of getting to our first 100 subscribers on YouTube. So pretty remarkable to get there as fast as we have. So that, we think, is acknowledgement that this has been helpful to people in their trading. Stock Twits and Twitter, retweet us to your followers. That also is a way to show acknowledgement of the value that you have found here. Comments can be sent to support@falconglobaltraders.com. Couple special offerings available right now. More details about this. Take a pause button and read this at your leisure, or go to this website for all the details. Same thing here. More information can be found about Falcon Global at this website. Disclaimers as always. Hit the pause button if you need more time to review. And we'll see you back here tomorrow morning before the market opens with the market preview from Falcon Global. Good trading.